Hi, Jonathan York from Bay Financial Partners, looking at investment markets. A very interesting week again for the US equity market. You've got about 25% of the S&P 500 reporting its earnings this week. After a pretty sort of knockout week last week with a lot of the big techs reporting and really sort of smashing their reports out of the park. But also as well, you've got the jobs data at the end of the week. Now that's expected to be around sort of 788,000 versus 850 for the previous month. That's certainly going to be a pretty big reading for July, and it's just going to be interesting to see how the Fed sort of interpret that. You know, certainly the last Fed meeting at the end of last month, they sort of implied that rates still on hold. They're still going to be very sort of supportive for the economy. So, I mean, the US economy is certainly pushing on at a pretty reasonable rate, although there were a few signs in the housing starts and sales that maybe the sort of economy and sort of confidence out there is maybe not quite as strong as first anticipated. But obviously it has to be put into context. You've got the sort of summer months, holiday months, a lot of people on vacation, but also as well, obviously you've still got COVID out there, and you're seeing a little bit of a rise in cases in the US now, and some of the states are even talking about potentially going back to a mandatory mask wearing in public. But on the plus side in the US, you've got pretty good vaccination rollout. You've got over 50% of the population now vaccinated. Most of them had at least one vaccination, if not the double dose. Indeed, in the US, there's even talk about a booster jab coming through now in sort of early part of autumn. And that's already been rolled out in Israel. Oil has recovered quite a bit of lost ground and is trading well above that $70 a barrel on WTI. In the UK, it's quite interesting. The UK economy is certainly pushing on at a reasonable rate since the restrictions have been lifted. But also as well, what has been very surprising is that after the initial sort of spike in cases are now starting to fall in the UK. Now, a lot of the experts are saying that's because of the sort of, again, the vaccine rollout. Nearly 60% of the population now has been vaccinated in the UK, and they're really sort of trying to get on top of the virus. Now, if that is the case and sort of living with the virus through the vaccinations, then it does sort of open up a whole new sort of frontier, really. Because many countries have been looking to try and eliminate the virus, and really that doesn't look like it's going to be possible. It's certainly sort of various mutations coming through, and potentially it's just going to be something we're going to have to live with going forward. Interesting in Europe that Pfizer and Moderna have increased the cost of the vaccine for the EU nations. Whether that's a little bit of sort of tit for tat in terms of the sort of vaccine rollout in the first place. Obviously, the EU has been very keen on the AstraZeneca rollout. Also, as well, a little bit of backlash from the European countries in terms of sort of a possible sort of COVID passport, if you like, for attending events, etc. And that's leading to a little bit of social unrest. I mean, hopefully that won't turn into anything too major, because really, obviously, after the sort of big lockdowns in Europe, the economies really need to get up and running and sort of fully open and people back to work, rather than protesting about COVID passports. Closer to home in Australia, still struggling with the virus. Certainly it's pretty rampant in Sydney. And now what they're talking about is, rather than sort of trying to eliminate the sort of virus and the cases and get that down to zero by the sort of end of the month, what they're looking at now is sort of a mass sort of rollout of the vaccinations and trying to get a further 2 million people vaccinated before the end of the month. Because cases at the moment are running sort of 180 to sort of 230 on a daily basis. But what is just disappointing from the authorities' perspective is that anywhere between sort of 30 to 50 of these are infectious and out in the community and not really being compliant with the lockdown. So obviously what they're looking at doing now is sort of, I say, trying to get everyone vaccinated. While it doesn't stop people catching it, certainly the actual severity of the virus is greatly reduced. Also as well, Queensland in a sort of snap 3-day lockdown as well. The Reserve Bank of Australia, on the back of the uncertainty with the latest COVID outbreak, has left rates unchanged. Has still decided to go ahead with the reduction in sort of the bond purchases from 5 billion to 4 billion. Because certainly the Australian economy still looks in pretty reasonable shape. Let's say really being buoyed by sort of commodities and resources. Certainly iron ore is still very highly sought after. Although there is a bit of M&A activity in Australia, Square are looking at purchasing Afterpay in one of the biggest deals in the Australian marketplace. Here in New Zealand, again, as we come into earnings season, it's just going to be very interesting. Not so much on the earnings report, but really the guidance going forward. Because again, the New Zealand economy is pushing on at a pretty reasonable rate, and it's just going to be very interesting, given the fact that the Reserve Bank of Australia sort of left rates on hold, to see what the Reserve Bank of New Zealand does later this month. There was talk about a potential rate increase from 0.25 to 0.5 on the OCR. That would be a 100% increase on the rate. And again, while we don't have COVID in the community here in New Zealand, given the uncertainty in other countries, it may just be enough for the Reserve Bank to just to leave rates on hold again in August. Potential moves as well from the Reserve Bank to try and sort of dampen the housing market in terms of sort of deposits required and the amount of lending that can be done to people who don't have the 20% deposit. Also, as well, the government facing sort of fresh criticism on, handling of the sort of vaccine rollout, other infrastructure projects. Potential we'll talk about now the Auckland cycle bridge over the Auckland Harbour potentially being scrapped or delayed at least. And that's certainly been borne out in the latest polls. Labour have dropped just around 10 points in the polls. Now, obviously, in this low interest rate environment, even if the Reserve Bank does increase the OCR from 0.25 to 0.5, that's likely to do very little to sort of term deposit rates. And say in this low interest rate environment, it is pretty tough out there if you're looking for income. But there are plenty of alternatives available and plenty of options. And if you're interested in sort of discussing what is available, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. I'm looking forward to speaking to you soon.